The first thing is kind of the common share equity holding that they have, which is MSTR. This is a trader's dream. This made Bitcoin real for so many people and for Wall Street overall to pay attention at this thing.
This is just the beginning of Wall Street starting to come to digital assets. So keep paying attention because this is just the beginning.
Welcome back to the TRU Money Show. I'm your host, Robert Miller. And in today's episode, we're going to be covering probably one of the biggest attention grabbing equities that is out there right now that is getting a lot of attention primarily because it has adapted Bitcoin on its balance sheet, which is MicroStrategy. We've had a lot of investors, family offices, and people ask us, hey, is this something that I should even be involved in? Is this more of a trade? Is this a long-term hold? Well, we have a bunch of varying opinions because in my corner, wearing the black coat, I've traded it, I've bought it, I've held it. In the other corner, wearing blue, has some theories and some suggestions as to why not to be involved. So we want to kind of go over some different perspectives as to what's really going on with MicroStrategy from a maxi perspective from Bitcoin or just from a trading perspective. So that way you have some ideas as to whether or not you should even be looking at this thing or, be adding it or not adding it to your portfolio. So John, I know that you're more in the blue corner of not wanting, a lot of exposure to MicroStrategy, the stock, the equity. So let's just talk about it.
Sure.
What are your opinions?
So I don't want to say anything negative about this trade. I don't want to say anything negative about strategy or Michael Saylor or any of those the blue money cult or the orange coin cult. Blue money cult is the Ethereum maxis. That's more where I feel comfortable. But yeah. So look, I would say that there's a lot of attention and activity on this, like you said. I think that because it has become such a huge flashpoint, focal point for equities trading, for volatility trading, for futures, for all these different things. It demands some attention and discussion. So I think that that's, you know, whether or not you're involved, I think it's something to pay attention to and educate yourself about. But I definitely think that there's a lot that changes very quickly in this market, not just from a perspective of what products MicroStrategy is offering to the market or what their name is. Right, they're called Strategy, not MicroStrategy anymore. So there's a lot of things that are changing very rapidly, and I think that that evolving landscape is going to continue to impact the evaluation of whether or not to get involved in trading or engaging with this activity that's going on.
Yeah. So basically, what we're going to be talking about is not financial advice, whether you agree with John or whether you agree more on my camp or you're in the maxi camp. Like this is just for educational purposes and for conversation. So I think it's good just to kind of go over what MicroStrategy is doing first to lay the ground rules of, what's actually going on because it is changing very fast. And there's a lot of products that are coming out from MicroStrategy, built around really a capital structure, built for different types of investors. So what does that mean? Well, the first thing is that MicroStrategy is a software company. It has cash flows from its software business. At its core, that's what it has been for X amount of years. I forget exactly how long they've been around, but that was their main business. And in 2020, because they had a big cash balance sheet and the money, the US dollar was printed pretty harshly by the Fed, basically. They wanted to figure out a way to offset the devaluation risk, meaning that if the Fed printed 40% more dollars, they don't want their value of their holdings to go down by 40%. They needed to invest that and deploy that. So they stumbled upon Bitcoin, and that's what really started this whole trajectory of MicroStrategy really going up and having a bunch of volatility. So, what is it that they're really doing? Well, in simple terms, they're buying Bitcoin and putting it on their balance sheet. So any public company can do this with some equities, with some bonds, with some real estate, maybe. But they did it by buying Bitcoin. And at that time, Bitcoin was a lot cheaper. So they had the luxury and the advantage of kind of moving fast, kind of moving soon, et cetera. So they've been able to aggregate now about 553,000 Bitcoin at the time of this recording. But really, what's been happening is that because Bitcoin has appreciated so much, yes, their cash value has, increased for the balance sheet, but then they've also layered in these different products. So that way the security itself of MSTR and the other products that they've offered can be purchased by other people. So most retail investors first started jumping into MicroStrategy, sent the stock through the roof. Then they started announcing different products for a preferred stock offering, a convertible note offering. Actually, the convertible note came first, which is a bond. And then they came out with a preferred stock and then a Series A stock as well. And these different capital structures and these different product offerings allows investors of institutional size, allows sovereign wealth funds, allows really just any mandated pension fund or any fund that's like restricted to have access to Bitcoin's volatility without buying Bitcoin and having to custody it themselves. So that's really the foundation as to what they're doing, and how they're doing it is very creative. You can go watch, the latest financial reports by Michael Saylor and them. But knowing that that's the ground rules, there's some fundamentals that he believes in, Michael Saylor, some of which I believe, and some of which I'm a little skeptical of. And then John obviously has his own camp of kind of what's going on. So the first thing is kind of the common share equity holding that they have, which is MSTR. It's backed by Bitcoin. They sell more and more of it to purchase more Bitcoin. And that, in theory, helps the price go up, and common shareholders have access to that. There is obviously some distinguishing of like, do they really have access to that? That's a whole different conversation. So, for the purposes of just having an open conversation about it, we won't get into the exacts. But that's kind of what people usually think when they hear about MicroStrategy. Now, if we just focus on is Bitcoin the right thing to do this with, that's kind of where John and I may have some differing opinions. So, with that foundation of knowing they have all these financial products and a capital stack built on top of Bitcoin holdings, let's kind of just dissect that first before we go into each one of the holdings. Let's talk about Bitcoin overall. He predicts that it is going to grow at about a 30% growth rate year over year for the next, I think, 20 years, he has mentioned. Let's start first there because that's the thing that underlines this whole entire foundation of capital stacks and structure.
Sure. So I think everything you explained is a pretty good assessment of the situation. I think that if you were going to pick anything upon which to build the structure that he has built, Bitcoin would be what you would pick. So I agree with that. I agree with the way he's approached this. I also think that he is probably uniquely suited to have been the person to do this just from the standpoint that he was at the time the longest tenured CEO in the S&P 500 and was having sort of a dark night of the soul as you described during COVID when there was this huge debasement of the currency, increase of the money supply by 40% essentially overnight. And he was also watching his enterprise software business being eaten alive by Microsoft and other competitors. And so he kind of did the homework, as he says, the 10,000 hours of research on Bitcoin to understand it, understand the long-term potential. However, if you boil all this down, he's not a trader, he's not an investor, he is a zealot. If you watch his presentations, he talks about 21 truths of Bitcoin, right? And it's like it really is a religious movement that he has created, and not created, but participated in and become one of the leaders of, right? So I think that's something that's important to understand, and I don't wanna be in the position of arguing against that necessarily because I consider myself a digital asset zealot as well. So I don't wanna necessarily say that I disagree with a lot of these things, but I think it's important to understand the risk associated with this is that if anything comes along to say, you know, to extend the metaphor, knock the Pope's hat off of the orange money cult and the religion of Bitcoin as this, um, global, non-sovereign, digital, immutable store of value. Anything that comes along that could damage that or threaten that, that's an attack vector that could damage the structure that he's built and could imperil the investments of anybody who's participating in the products that he's offering on the market. I don't think that the likelihood of that, at least in the near or short term, is material in any way that I can readily see, let's say it that way, but it's not zero, and it is a little bit of a difference of there's not necessarily cash flows, there's not necessarily what you would normally associate with, trading or investment. It's a zealot thing. The projected future growth of the price of Bitcoin is, depreciated based off of history and, I think it's like 60% ARR, uh, for Bitcoin over the course of its history. So he's anticipating that that will sort of taper and but continue to grow. That is a function of a lot of different factors, most of which are exogenous to Bitcoin itself. So what I mean by that is that, and Robbie Mitchnick and I had a discussion about this. He's the head of digital assets at BlackRock, and he kind of made this point that there's only a few things that happen every year or every number of years that fundamentally change or impact the value of Bitcoin or the Bitcoin protocol or the Bitcoin asset itself. And the Bitcoin network is obviously different than the Bitcoin asset. Those are two different things, but like the halving event, for example, is something that directly impacts the Bitcoin asset because it reduces the issuance of new Bitcoin, right? So like that's an example of something endogenous to Bitcoin, the value of Bitcoin. The valuation, right, is different because that is you're denominating Bitcoin in dollars, in rubles, in houses on the US real estate market, right? If that's your denominator, the valuation of Bitcoin will be influenced by exogenous factors. So that 30% ARR is ultimately an exogenous impact on the valuation of Bitcoin. So the money supply in terms of global liquidity that's put out by the People's Bank of China, the Federal Reserve, and European central banks, those are not changing at a protocol level Bitcoin, nor are they changing the asset Bitcoin itself, but they're changing the valuation because we are denominating in some central bank digital currency. So before Bitcoin put in an all-time high against the dollar, again in this cycle, it put an all-time high against 113 other central bank digital currencies. So I think these are just some things to understand about this when people are evaluating this. What Saylor is doing is something I think he was uniquely educated and situated to do because of his tenure and his experience. He did the time and research to understand this asset is, the hardest monetary economic asset on the planet currently. Um, but there is a fundamental assumption that that will continue, and then that 30% ARR, it has a history of 60% ARR. The 30% going forward, that assumption may well hold, but that is still an exogenous thing that may be influenced by things outside of the control of Michael Saylor or of Bitcoin itself.
For sure, yeah, and definitely Bitcoin being tied to global liquidity is one of the main metrics that everyone in digital assets looks at. It's like, hey, is liquidity going up or down? Because risk on, risk off is a thing in macro markets, especially with tensions rising. Now, it doesn't necessarily correlate with gold, but we've seen a massive rise in gold recently, and so that's driven by a lot of these factors of macro events and actual physical settlement. So one of the things that people ask about with Michael Saylor, it's like, hey, is that actually a threat to the network that they have so many Bitcoins? And so, to your points as well about like, hey, is this rocket ship going to continue? I've obviously participated, just for full disclosure, equity investments into MicroStrategy. I've purchased some of the yield options that come off of it for some of the ETFs that are participating in call options or put options on it. And I've actually traded options on the actual stock itself. So because I have more of a trading appetite, and I have purchased about a year or so into their program. Obviously, I'm at a pretty good price point. Um, but I love the volatility. Volatility to me, screams being able to trade it, being able to pick stuff up. Um, and so, value investing is only good from a price point perspective because I got in relatively early. But for those that are now just considering it, it's playing by a different set of rules than when I first got started into it. And so, one of the things that I actually just made an X post about that is important to understand, like you mentioned, because Michael Saylor is very uniquely qualified. I'm a big fan of Michael Saylor overall. I think he's a great dude and has been able to provide something to the markets that it's been wanting, evidently by the demand that it's gotten. But something to keep in mind now is that there's other entrants coming in. And so MicroStrategy, is uniquely advantaged because they have 550 something thousand Bitcoins. They also have all these other products, whether it's convertible debts, whether it's derivative products called BMAX and a few others that are participating in some of the things that only institutional buyers are. But now you have all these other people entering, and they may be coming in at lower scale. But one of the first things that was sort of highlighted with MicroStrategy was that when I first got started, they were just starting their program where they would take on convertible bonds. They would raise $1 billion, 0% interest, and they would just dump that into Bitcoin, basically. They would do that over and over and over. And by them doing that on convertible bonds, that's a little bit different than equity. But as they started to increase their shares and people starting to buy into the shares, well, that dilutes the common shareholder out of the original side of holdings, if you want to just call it that, that they had access to. And so I think he's done a very good job in being able to still give upside to the common share, which is the lowest in the capital stack, and giving priority and seniority to the other ones. But the dilutive factor that happens is backed by the growth of Bitcoin being 60% per year that we stated prior. Even if it's 30%, then then he has that 30% factor working on him there in regards to price action. He's also got the S&P 500 because now they're part of it, passive capital flows. So as the S&P grows, he gets a piece of that action as well. So that helps obviously offset the risk of MicroStrategy's stock drop because they have enough velocity by being in indexes now. But because these entrants are coming in, to get back to my other point, uh, if a company's equity does not have the same velocity that MicroStrategy did, or the same financial engineering or the demand, then people can go copy those programs, but they may not have enough velocity and they can actually just dilute the shareholders. So I'm watching the company 21 very closely because they're one of the newest entrants into the Wall Street space. They're going to be a Bitcoin holding company. But if they don't have that same velocity and they're issuing a lot of, common share, raises and stuff, then that can be a problem. But with MicroStrategy specifically, I think that it should be in people's portfolios. That's just my personal opinion because I've been in it. But you just need to understand Bitcoin's price action in regards to global liquidity events. What are the underlying technicalities of Bitcoin? Because his entire capital stack is built off of an arbitrage of companies and pension funds not being able to interface with Bitcoin directly. So if you don't understand Bitcoin, then you don't understand that arbitrage that's going on.
I think that's right on the money. I think that there's another thing that you're kind of putting your finger on or around, which is that the impact of memetic investing on MicroStrategy or strategy's stock performance has been, I think, a little bit underappreciated thus far. So, what I mean by that, uh, there have been so what you're talking about right now, like with 21 Capital, with MetaPlanet, with all these different Bitcoin treasury companies that are kind of copying the or modifying in some way Strategy's playbook to become a Bitcoin treasury company. There's now 180 of them on the market. When there was only one strategy doing this, right? Like that was a much different situation. Now there's 180 of them that custody somewhere over 3 million total Bitcoin. Um, so there are other ways to get exposure to Bitcoin other than paying the huge premium markup for strategy. So I think that regardless of whether or not this works long term, which I'm sure it will, I'm not. I don't think this is going to collapse. I'm not like a massively short strategy person by any means. I think it's trading at a premium right now that has the market has awarded it that premium, and there's been so much economic activity around it, so much volatility, so much attention from so many different parts of the market for so many different reasons. It's gotten that much momentum and attention as a result of the mimetic investing of being the only one on the market, and that is gonna be diluted. The dilutive power of that, of these competitors and copycats, is gonna start to materialize, I think, into the price at some point. Again, I don't think it's gonna lead to anything catastrophic. I think that there's just gonna be more ways to get a play on Bitcoin. The Federal Reserve last week relaxed their restrictions on banks owning and custodying, digital assets, Bitcoin specifically. The repeal of SBA or SAB 121 is going to make this something that banks are going to be able to use Bitcoin as collateral and different other things. So there's going to be a lot more opportunities in the marketplace to get exposure to or make a play on Bitcoin other than just uh, common stock or convertible bond or going to strategy is the only focal point now. So I think that as that happens, it's kind of like the reason I bring up mimetic investing. Uh, Dogecoin was like the big meme coin initially. Now there's 37 million different meme coins, right? And like fart coin is a great store of value now, right? So like I'm kidding, that's not financial advice. But the point I'm making here is that as these 180 other Bitcoin treasury companies start to come into the market and capture some attention, there will be a dilutive effect. And then that will, I think, sort of bring down this premium that strategy's been enjoying for a long time as benefiting from being the first mover in this space. But yeah, I don't think it's going to lead to anything catastrophic, but I do think that that's going to we're going to see how that plays out. There's going to be a lot of other ways to get play on Bitcoin now.
Well, so in that regard, I think Michael Saylor did a good job of, protecting his downside because he knew that a premium squeeze was going to happen at some point. And so by selling 2 or 3 or 4 or 5 times NAV, he's able to afford that compression. Actually, in their Q1 earnings call, they just went over that where, hey, maybe not for their, I think it was their strike bond product, but there are other ones where they could afford a dip. mostly. So the underlying thesis around a company like MicroStrategy, which took Bitcoin and gave investors 6 or 7 different options really to participate in different layers of a capital stack or different uh, risk parts or risk analyses of Bitcoin's volatility. Having those different exposure products um, really comes down to your core thesis in Bitcoin. If you think Bitcoin is going to continue to grow at 40, 50% per year, well, then the MicroStrategy play has enough velocity, has enough volume, has enough of a risk premium, if you will, to continue to charge because they are helping people get more volatility out of that innate move. Even if you believe Bitcoin's only going to go up 20% per year, still you can tap into more volatility by using their products, and their investment options. Now, if you want to have less volatility with Bitcoin, they've created products for that, but less volatility in Bitcoin, then don't buy Bitcoin. That's my opinion because like Bitcoin is a volatile asset. It's a blessing to be volatile. I love trading it. So, if you I obviously I have long-term holds as well, but if you go in it with the wrong approach of not understanding Bitcoin, not understanding the financial models of the projections to grow into some of these products, that make them investment grade or make them junk, then it can steer a lot of people the wrong way. So obviously we love Michael Saylor. I don't think that there's any question on that. Um, but it's very interesting. So as these other people participate, how much dilutive pressure will be on some of these other offerings, we'll have to just see.
Right. Yeah. And I think it's something that we're gonna have to, just like you said, just kind of wait and see. I think, like I said, people are gonna have to continue to educate themselves. This is gonna change rapidly though. And like I think that's something that, if you're willing to pay attention to that degree, then, maybe this is something for you. But I really don't think that this is a kind of like just like set it and forget it type of an investment. There's gonna be a lot of continued volatility and just like changes to a lot of these things.
For sure. This is definitely, if I had to rate it, this is I mean, more and more institutional buyers can participate in strategy, but this kills two birds with one stone. You got institutional exposure to Bitcoin and you have extreme volatility. I mean, this is a trader's dream in equities and in options and in futures. Like, this is an awesome product to trade, and it's built to have more volatility and strip in a bunch of different ways. So, just understand a lot of times volatile stocks, it's all about which price point you get in at, right? If you bought it a month ago at the time of this recording, you're up 60%. But if you bought it 2 months ago, you could be down by 50%, right? So it's like it's really one of those stocks that you just to pay attention to if you're going to participate in it. But I applaud MicroStrategy and really Michael Saylor for taking the big move because this made Bitcoin real for so many people and for Wall Street overall to pay attention at this thing. And you have a lot of people, like I've had some really cool guests on the show, and even just in personal meetings over the past year and a half saying like, hey, energy people are now coming in. Big people are just coming in. We were just at an event together in St. Petersburg a few weeks ago, literally going over energy and institutional adoption. And that conversation wasn't happening just a few short years prior, and so it's definitely brought it to the forefront. I think there'll be more activity ahead, and like, John said, this is definitely something to keep an eye on if you are gonna participate, but let me ask you this, I'm more in the favor of being able to trade this thing and that kinda stuff. Outside of the fundamentals of the price action or of Bitcoin itself, do you think we could have actually, at the time that he actually did it, do you think we could actually see a 2.0 of strategy with any of these other entrants? I don't think that there can be because he entered at such a unique time with Bitcoin so low. So I want to hear your thoughts as to, why a competitor may be able to compress and maybe squeeze or not.
Yeah, I think that's a great question. So first of all, I just want to be on record as also saying Michael Saylor is a hero. I think he's done a lot of wonderful things for Bitcoin and for digital assets. And I don't want to be accused of saying anything to the contrary of that. So to that point, I think he's got a huge advantage as a first mover in this particular niche of the market. I think that there are people that could compete with him if they sought to, but I don't know if anybody's gonna seek to, exactly, right? So, like, I think, like, for example, if Warren Buffett really went out and decided to try to compete with Michael Saylor, I think he could do it, but I don't see that really happening. So it's a question of, like, some people might be able to, but I don't think anybody really who could would necessarily, right? I think that's something that he's probably aware of as well, right? Like, if certain people got it in mind to go ahead and try to crush him. Uh, there's ways that could be done, but I don't really think that that's a likely scenario. It would take so much capital and such a deliberate, targeted effort that I don't really see that as being a highly likely outcome. But that's just it's not a zero probability, but I don't think it's very likely at this point.
Interesting. Yeah, because people are comparing MicroStrategy to the whole Luna fiasco, where it's, you have the Bitcoin standard peg thing, and it's definitely not the same thing. And we're not going to go down the Luna rabbit hole, but for those that think that MicroStrategy is the same, it's definitely not. And so, well, cool. Well, thank you for sharing your thoughts, man. And whether you're black corner, whether you're blue corner, let us know in the.
I want to say one more thing before we get off of this topic. I just want to call out something you said, that this is the first real thing that's brought Bitcoin to Wall Street. But this has only brought Bitcoin to Wall Street. There is an enormous amount of technology, of value, of things being worked on and developed in the digital asset space that Wall Street still has not even begun to get their arms around. And I think that this is just like an example of the power that can be unlocked from the adoption and application of finance to digital assets, and what it looks like when Wall Street really starts to understand and get their arms around these things. So this is really just the beginning of the beginning. And I think that that's something to not get lost in this shuffle either. Like Michael Saylor knows that he's just getting started. Digital assets are just getting started as well. So I think that's something to keep in perspective in this as well. It's not like you've missed it. It's not, it's over.
Right.
This is just the beginning of Wall Street starting to come to digital assets. So keep paying attention. This is just the beginning.
Yeah, this stuff is not going away. Digital assets going to continue to grow.